Michael Saylor lost $1.6 billion unrealized loss in Bitcoin. Will he be liquidated? Now, there are a handful of popular Bitcoin diehards from the tech industry, like Elon Musk, but very few who stake the future of their company in their beliefs in decentralized currency. Michael Saylor has become a Bitcoin icon for doing just that, earning millions of followers on Twitter after his company MicroStrategy invested $4 billion in the currency. However, the continuous bear run may not just cause Saylor to reconsider this investment strategy. You see, his firm may be forced to liquidate part of its investments to pay the difference for the percentage of its Bitcoin holdings bought with borrowed funds. Will the biggest corporate hodler of Bitcoin be forced to sell off its coins? Watch to the end to find out if Michael Saylor's company will be liquidated in the fallout of the crypto market crash. Hello, by the way, Maddie here, your Crypto Knight, and this is the channel that aims to spread awareness on cryptocurrencies. Crypto Knights. Yeah, I'm here once again to share and spread awareness on everything crypto. But now, before we delve into Michael Saylor's billion-dollar potential losses, please know that whatever I share here is not financial advice. And we on Crypto Knights are not mandated to create videos for any brand, any service, or even any cryptocurrency. I'm just another chap crazy about cryptocurrencies, deep into investing in them, and who has got a passion for spreading awareness and education on, well, the many possibilities that cryptocurrencies offer. So, with all of that out the way, let's get back into Michael Saylor's Bitcoin dilemma. For those who don't know, Michael Saylor is a software entrepreneur who made his fortune in the 90s. Saylor co-founded MicroStrategy to provide business intelligence software for businesses. Now, this software helps companies make data-driven decisions and build mobile applications. Now, a major deal with McDonald's in 1992 worth $10 million launched the company on a trajectory that made it a multi-billion-dollar company today. MicroStrategy is the biggest corporate holder of Bitcoin as it stands. The company has been stacking Bitcoin since late 2020, investing billions of dollars and even taking out a loan to acquire them. As of now, MicroStrategy has accumulated 129,218 Bitcoins, making them the biggest corporate holder of Bitcoin. This investment strategy has exposed the company to a loss of $1.6 billion as Bitcoin dropped to its lowest value since December 2020. But more on that later. The company's move to invest so much in Bitcoin is obviously a reflection of Michael Saylor's faith in it. Saylor has tweeted that he personally owns 17,732 Bitcoins, which was back in 2020. However, Michael Saylor has not always been so bullish on crypto. Back in 2013, Saylor tweeted that Bitcoin days are numbered. Like many other top executives, he believed digital currency was just another fad. In the same tweet, Saylor predicted Bitcoin will suffer the same fate as online gambling. Well, this seems pretty much like a stance set in stone. But Saylor did change his stance, eventually convincing the rest of the company to go all in. So the question is, what changed him? What did Michael Saylor see in Bitcoin? Michael Saylor said he went down a rabbit hole. This was in 2020 in the heat of the COVID-19 pandemic. The result of his research made him regret his initial stance and not getting into it much earlier. Could this regret be the source fueling MicroStrategy's unorthodox investment in Bitcoin? His newfound love for Bitcoin has certainly earned Saylor the scorn of popular crypto naysayers like Peter Schiff, who believes Saylor to be insane for staking so much in it. Much of Saylor's trust in Bitcoin comes from the belief that Bitcoin is a store of value that is independent of the whims of traditional finance like dropping stock prices or inflation. He also believes that Bitcoin has all it takes to be adopted massively enough to replace fiat currencies for everyday transactions. Most crypto enthusiasts believe the same. However, recent events have started to poke holes in this belief. Cryptocurrency prices have shown an increasing correlation with traditional finance ever since the economy started recovering from the market crash following the COVID-19 pandemic. Both rose from major lows to all-time highs. However, the current bear run of the cryptocurrency industry started with the Terra Luna crash. Now, the crash can't be news to you if you have followed crypto events even for a little bit in the past couple of weeks, but here is a brief history for those who don't know. It all started with a stablecoin, UST, that was supposed to hold the same value as the US dollar at all times. A run of systematic errors caused UST to lose its peg to the dollar dragging down its sister crypto project, Luna. Now, this chain of events caused a ripple effect across the entire crypto market where billions of dollars immediately vanished into thin air as crypto investors started to panic and lost faith in the other projects. Unsurprisingly, Bitcoin, the pioneer cryptocurrency, suffered heavily as well, dropping below $21,000 after another major blow in the ongoing crypto market winter. Bitcoin plunged further to its lowest in 1.5 years after popular crypto lending platform Celsius suspended transactions on its network on the 13th of June, resulting in Bitcoin losing over 20% of its value over that single weekend. We've made an entire video that goes deeper into the Celsius withdrawal suspension. You can take a look at it here. Now, if you haven't figured out how this spells massive trouble for a $4 billion investment, here's the summary. MicroStrategy's stash of 129,218 Bitcoins is now worth just about $2.5 billion. The situation would be different if the company had an early entry into the crypto market. However, Saylor and his firm started stocking up while Bitcoin was reaching all-time highs, resulting in an average purchase price of $30,700 of their total Bitcoin stash. MicroStrategy's enthusiasm and faith in Bitcoin's future was so much that it took out a loan from Silvergate, a decision that might force it to liquidate a portion of its Bitcoin holdings at a loss. Earlier in April, MicroStrategy took out a loan of $205 million. Silvergate, a bank focused on servicing crypto stakeholders, to fund another round of Bitcoin purchase. Now, the type of loan taken from Silvergate is called a margin loan, which investors use to increase purchasing power when buying assets. The hope is that growth in value of the asset, in this case Bitcoin, offsets the interests significantly. Now, when it works, the investor, MicroStrategy, can make more profit than if he had financed the purchase alone. On the other hand, the lender has a right to force a sale of the assets if their value drops below a certain value. The investor is notified once the value of the asset drops below this minimum value, giving them a chance to fess up to the difference and prevent a forced sale. Now, this process is known as a margin call. MicroStrategy CFO Phong Le responded to growing skepticism back in May by addressing the terms of their loan. He said in a conference call that the value of Bitcoin would have to fall below $21,000 before their lender Silvergate can initiate a margin call. He continued by reassuring fans and skeptics that even if Bitcoin did fall below that $21,000 mark, they could easily provide the collateral to prevent a margin call. If MicroStrategy is forced to liquidate its current Bitcoin holdings to satisfy the margin call, it would be doing so at a loss of about $10,000 per BTC. The feared drop in price is here, with Bitcoin currently trading at less than $21,000. Now, we don't know if Silvergate initiated that margin call yet following the Celsius-caused price drop. What we do know is what Saylor himself has said in a series of tweets that he's put out since June 14th. He pretty much affirmed what Phong Le has said, reiterating that MicroStrategy has enough collateral to weather increased volatility in Bitcoin prices. In one of these tweets, he said, when MicroStrategy adopted a Bitcoin strategy, it anticipated volatility and structured its balance sheet so that it could continue to hodl through adversity. Hodl is the crypto slang for long-term investment, despite uncertain market conditions. Hold on for dear life. While MicroStrategy is the publicly traded company with the largest investment in Bitcoin, it is hardly the only one. Under the leadership of Elon Musk, Tesla bought $1.5 billion worth of Bitcoin early last year. Block, formerly known as Square, also bought $50 million worth of Bitcoin in October 2020 under the leadership of Twitter's Jack Dorsey. Now, they've all cited similar claims of diversifying and hedging their funds against inflation, government policies, and downward trends in traditional markets. When MicroStrategy started its Bitcoin purchase in August 2020, it had excess cash due to the nature of the market during the pandemic. Its CEO had just become a crypto optimist, and the circumstances, well, just felt right to diversify its investment into an unusual investment like Bitcoin. But seeing as it has gone as far as taking out loans to finance its crypto investment, MicroStrategy has in part become a Bitcoin investment company. The rise and fall of the company's share price, according to the trends in the crypto market, reinforce this theory. Much of Michael Saylor's personal wealth is tied to MicroStrategy, and by extension, Bitcoin. Therefore, he has much more to lose to a continued bear market. Amidst the continued drop in Bitcoin's value, Saylor has remained fervent in its support with tweets like stack sats and stay humble and hurdle through adversity. Sats is another crypto slang and another word used that means Bitcoin, in reference to Satoshi Nakamoto, the known name of its original developer. Of course, the continued drop in the value of Bitcoin means that MicroStrategy will have to continuously drop collateral to protect the portion of its Bitcoin investment bought with borrowed cash. And, well, we are all at the mercy of the unpredictable market. And that is it for today. Do well to like this video, subscribe to our channel, and hit that notification bell. And until the next video, fellow investors, this is Matty signing off. Take care, everybody, and don't forget to invest wisely.